Hello and welcome to the Assay today. I'm very happy to be joined by Ian Lange, the Coulter Chair of Mineral Economics at the Colorado School of Mines. So Ian, it's great to connect with you here again.
Yeah, very excited to talk about minerals. It's an exciting time.
Absolutely. And maybe we could just start with a quick kind of overview into your professional experience in this industry.
Oh, yes. So I've jumped in and out of the federal government a number of times, including stays at the Environmental Protection Agency, the Department of Energy, the Council of Economic Advisors. For those that aren't aware, the council is a group of academics that are in the White House and sort of help the policy makers, with data and things like that. I was their senior economist for energy. I've helped out the Commodity Futures Trading Commission, thinking about mineral markets, and then just other things on the that are smaller, say within the state.
Excellent. And so you recently chaired a federal subcommittee that's focused on critical metals. So, what are some of the biggest challenges that you're seeing in making these markets more transparent and investment friendly?
I mean, the biggest thing is they're extremely small. So we sort of started that discussion with hey, there's lots of critical minerals that people are excited about. We want to bring price discovery. We want to bring transparency to it. But in reality, right, the size of these markets are often in the tens of millions, maybe, sometimes get up to 100. They're just too small to have lots of people trading. There's too much, we'll say, like insider information, so indium is very important, say for screens, like on iPhones and things like that. But the India market is super tiny. You can never have, a futures market that's on indium. Just too few suppliers, too few demanders, right? The sort of the price discovery wouldn't really be there. So then it was really trying to think about what's the right balance. And in a lot of ways, that was the committee was empowered for the time when sort of first it was like green nickel needs to be a thing to save Australian mines. And then there was just, hey, let's think about some other attributes that we might put into the mineral markets. But, in the end, we just sort of said, look, it's really difficult to say, say a green nickel market would be successful. How do you define green? I mean, one thing, that we've seen already is that with this concern over that is, a number of basically refineries in Indonesia, the Chinese run refineries. Oh, great. We'll just put solar panels on our roof. Guess what? Our carbon emissions are better, right? And that's not really the goal of the green nickel market, was to just basically say, okay, have low carbon emissions or something like that, right? However you define it, there's going to be ways for people to scheme around it. And so in the end, we just sort of said you do best by not doing any harm. So really tread lightly. It was interesting to hear that the staff at the Commodity Futures Trading Commission, they said something to the effect of we have one person who knows gold and they're 68. So, we know nothing about any of these other markets. It's really hard for us to understand when we might be seeing market manipulation or things like that. And so not surprisingly, one of the recommendations was, come on, get staffed up, have people who understand some of these markets and how they're different than a precious metal market.
I find it interesting. You bring up green nickel. Over the past couple of years, there were so many discussions about kind of greenifying a lot of the metals, but those discussions seems to have disappeared somewhat from discussion. What do you think of that?
I mean, it's certainly up kind of more like on the political winds, right? The political winds have shifted a little bit. There's sort of maybe a different thing that people are interested in, like these equity investments that the federal government in the United States are making. Right. LME still, is rolling out their sort of, green attribute for I think it's for nickel and aluminum markets. But yeah, it's died down a lot. I mean, I think there was a big push to, like I said, maybe save the Australian nickel mines. And then just realizing that there's no way to make that happen. And then sort of there's no political appetite anymore, tracing the minerals. Right. It is fairly difficult, obviously, to tag some dirt. And then as it moves through the system and say, this is good dirt, that's not good dirt or something like that. So, yeah, I think when people start to think about the mechanics of it, the excitement sort of died down, and what we see now is more like a voluntary system where the LME will allow somebody to pay more, for nickel that has certain attributes, but they're still having their, we'll say, standard nickel market.
Okay, interesting. And so, you started to bring up the politics of it all. And so, especially within the US, we've seen a lot of new regulations that are coming on board to, looking at domestic mining and refining within the US. So, maybe you can talk about some of the key regulatory gaps that you're seeing here and, how we move forward.
Okay. Yeah, there's been a big push to sort of reduce permitting time, increase permitting certainty. It's all been at the executive branch. There's been very little out of the legislative branch. But unfortunately, the other thing the executive branch is doing is obviously like the current shutdown and then just a big reduction in government workforce. So they kind of balance, they're sort of balancing each other out in that it's hard to move a permit process forward in a way that the people can trust when, there's no one there at the agencies, or we're fighting, people who are there are really worried about either being let go or, something else happening. So I haven't really seen much movement on the permitting front, we'll say. What's really been all the movement is, the Department of War and Department of Energy really saying, like, we have this new toy, this new tool, taking an equity stake, like, let's try it out, right? So it started with the MP Materials deal in July. There was the Lithium Americas deal in September, then Trilogy Metals in about 2 weeks ago, and then most recently the ReElement Vulcan partnership. So it seems to be like that's the new way that they want to try to do things in the Department of War. They're trying to find more ways to push firms to start producing, right? So there's a price floor in the MP Materials deal. There are sort of similar things in the Vulcan ReElement deal that's going to encourage production. And so that's really where I think, the meat of the policy is they have, I would say, they have finance folk in those agencies trying to make things happen, where just in my experience or in my belief, it was geologists or mining engineers trying to make those decisions in the past. And so they gave, hey, it's a great idea. We need to give some money to geological characterization, or we need to give some money to, help them build part of the mine. And you're like, well, that doesn't really make it operate, right? So you have a nice, what the dirt looks like, or maybe you have part of a building, but no one wants to go in and produce anything from that because you can't make any money on the operation, right? And so that's been kind of the biggest change that I've seen, is this move towards operational subsidies, pulling in money to encourage things to happen.
Yeah, absolutely. And so, I mean, part of that drive for more kind of domestic mining and refining work is to kind of secure these regional supply chains. And with that, we've seen kind of friendshoring becoming a big buzzword in the industry these days. So also, we're seeing lots of new partnerships between governments around the world. So, are you seeing these as having like a material impact on the global supply chains? And how is that impacting pricing? What are some of the bigger impacts that you see from these types of deals?
Yeah, I mean, obviously the Australia one was kind of nice. There was a little bit of meat on the bone. We saw something like kind of concrete. In the past, it has generally been these things nobody really knows what they mean, and they're just sort of like social niceties. So I would, I would obviously on this kind of discussion, I usually push back a little bit of like, I don't really think that there's a lot of interest in friendshoring. I mean, the way I view the current administration's behavior is you have sort of macro folks that are very worried about a recession, and they're going to say, look, like, fine, we can push China a little bit, but we can't push too much, because if they, things get shut off, if Ford has to stop producing, right, we've got recession, really bad for the midterms, right? So those people, that group is very much in the like, push a little bit, but don't break away from China. Then there'll be more national security type folk that are America first. We need to reindustrialize the US. We need, to encourage domestic mining, get more things going on. Those folk also don't really have an interest in what's happening in Australia, in Africa, in other places because they want it in the US, right? And then this third group, and I would argue that they're sort of a, far third. They're not really close, but then they're interested in these, supply chains. They're interested in building out, saying, look, Australia's got some nice rare earth deposits. Maybe they already have some agreements with, with companies in the US. Let's take advantage of that. But again, I really think they're a distant third in sort of the, political power within the administration. And so I don't see too many more things happening there. I don't see much evidence that, Department of War is going to say, we're really excited to, give a bunch of money to, to Angola for the Langojo, rare earth deposit, when there's 5 or 6 rare earth deposits in the United States that are also knocking on their door saying, hey, we look good too. Like, give us, what about us? I think that's just politically difficult to do something like that. And I would be surprised if there's too much of that happening.
Okay, so you see these deals as not really materially amounting to much moving forward?
Right. And the other thing is, right, the U.S., has been talked about in almost all of these industries. The U.S. supply chain is really tied into Canada, right? Mexico. I mean, that would make to me at least, that would make a lot more sense if we're going to talk about friendshoring. It's like, okay, hey, man, like Tex smelter that's in British Columbia, the Trail smelter, right? Its feedstock comes from Alaska and Idaho. So U.S. feedstock, right? And so let's do something there, right? Like, that seems like an easy win-win. We've got that supply chain already, together. There's already agreements. And instead, we're this kind of like, oh, we're going to go look at what's happening in Africa, Ukraine, and Greenland. It's just, it doesn't seem like the least cost or the easiest way to fix some of these problems.
Yeah, absolutely. And I mean, we saw what happened, say, during COVID, when we had these kind of disparate nations trying to work together, but then also with kind of the breakdown of actual, shipping and other things that really impacted it.
Australia is really far away relative to Canada, right? So it's really hard to beat that, right? Yeah.
Absolutely. And so moving on to kind of something else. So in some of your recent work, you've highlighted the importance of byproduct critical minerals. So things like gallium, tellurium, what kind of policy mechanisms could help incentivize this kind of, the recovery of these types of byproducts without destabilizing the markets?
Yeah, I mean, well, I would say in these small markets, like I don't see a way to, we'll say, have Western supply chain without the government just paying for it. And then the other thing is, these are such small amounts, right? The size of the markets are so small. The amount of, investments that would be needed are pretty small. So it just doesn't seem like there's a way to make anything else happen than the government coming in and saying, look, we'll just buy it, right? Like, we'll just, fine, turn on that gallium separations unit. We'll just pay for it. In talking with, I was sort of amazed about how many people are ready or just have the ability to make gallium, all just kind of sitting on the sidelines saying, look, if I make any of this, I'm going to double U.S. production, or U.S. demand, my apologies. I'm going to double U.S. demand. I'm going to crash the price. So, I can't go to my corporate board and say, I got this great idea, right? Like, we're going to make this investment. We're going to crash the price of the product that we want to sell, right? And we'll make nothing from it. And so, it's just got to be where somebody comes in and says, look, come on, man, this is like 30 million. Let's just do it, get it out of the way. And, one of the things I often find when chatting with folks about this idea is it's this sort of belief that 30 million would not have been spent otherwise. And from my experience, if you don't spend 30 million fixing the gallium problem, you're going to spend 6 million this year hiring a consulting firm to tell you about, is there a gallium problem? How does the gallium problem work? And, and then next year it's going to be 10 million hiring a different consulting firm to tell you about, so in the end, right, you're going to spend that money. Might as well just fix the problem instead of asking somebody to tell you, if there's a problem or whether there's a problem. Yeah.
Absolutely. And I mean, I think that stresses these key supply issues that we're seeing in so many of the critical minerals. So, how should governments approach this? Do you think it's just that kind of straight in, let's just invest the money now and make sure that we're able to stockpile these key minerals?
Well, one of my concerns with this general term of critical minerals is that, you have these things like copper, aluminum, bauxite, right? Huge markets. And then you have indium, bismuth, right? Super tiny markets, and you talk about them sort of as like they're the same. And so this is where I, tend to really feel like the easier way to like get something done is just tackle those small markets, right? For any amount of money that a government might be willing to spend, they're not going to move the needle on copper. But you could fix three critical mineral supply chains. And the trade-off just doesn't seem something to discuss, right? It's clear. Just, fix antimony, gallium, and germanium, right? Rather than maybe getting another copper mine open or something like that. Because again, the other thing is, I had this great conversation recently where it was asked by a copper mining company that also had cobalt in the deposit, hey, would you put an engineer on the project to start getting some more, looking for cobalt, getting some cobalt out? And they said, are you kidding me? If I'm hiring someone else, we're going to get even more copper out of the ground. And the next hire after that is someone else to look for even more copper, right? Like, the worry about these extremely small markets that are, that are byproducts, but are critical minerals is so far down on any mining firm's, wish list or things that they worry about. So yeah, someone has to come in and almost be like, hey man, come on, man, you have to look here. We have thought about something that might be like, look, if you help us out on indium, we'll help you out on permitting a copper deposit, or, we'll help you on permitting a zinc deposit. That seems like a nice trade. There is similarly in the US, there's something called like an orphan drug policy, where if a drug company brings out a drug that is for, a very small market, then, their next big market drug gets pushed to the front of the line for review, and allowed to be sold. Sorry. And so I can imagine something like that, saying, okay, Rio, right? Like, you're going to get gallium out of your bauxite smelter in Quebec. Perfect. Okay. What do you want? You want a zinc permit, you want a copper permit, right? Like, you're doing the things that are helpful. We'll try to then help you out. That seems like a way to not have government expenditures, but, it's just not going to happen without somebody giving a push.
Yeah, absolutely. I mean, I think should be kind of a critical place that governments globally are looking at now. And so moving on, our audience is predominantly investors. So, and you've spoken quite a bit about kind of the difficulty that investors can have in predicting future demand, pricing, and kind of just understanding where to invest based on those factors. So, how would you suggest that investors can kind of approach these markets with that uncertainty?
Yeah, I mean, it's really tough when the government's getting involved in equity deals. I mean, I was sort of surprised after, MP came out, right? But every rare earth stock, right, went up. But of course, when Lithium America's deal came out, it didn't really affect the other lithium stocks. And then when Trilogy came out, right, it helped Trilogy stock, but it also bumped Northern Dynasty, the Pebble mine in Alaska. And I'm kind of scratching my head, like, they're totally unrelated, right? They're not near each other. There's a whole bunch of copper, cobalt, deposits around the U.S. Why did you pick that one to also spike its price? So yeah, it's really tough as an investor, I would say, to maybe like predict where the next one's going to be. And clearly, I would say a lot of the rare earth stocks have really just, the valuation has kind of gone crazy, right? So everyone's hoping / betting what will be the next stock that gets government money. And so all the rare earth stocks are pretty high valuations compared to, what we think their cash flows are. And just to step back to what I said before, right? Like, if the macro folks went out and we go back to a situation where like, hey, China, we really just want, we want to keep the supply chains flowing. We want no disruptions, right? Almost all of those projects, right, are now underwater financially, except for the fact that they have price floors or they have some sort of pricing support, right? But they're just not, they're not on their own something that is profitable. So it's going to be difficult. Clearly, the copper and the golds of the world, are where everybody already has their money, where everybody's already very excited.
Yeah.
I'm a little bit skeptical on the copper story. It's been a story for a long time. Copper prices haven't really moved that much. And so, but, clearly folks like, Anglo and Teck merge kind of as a copper play, right? There's been a couple other companies that are really going after copper. That seems to be where firms are.
Okay, excellent. And so, just to wrap it up, what do you think will be kind of the key trends that we'll see? We're coming into 2026 now. So, what should investors, juniors be on the lookout for as kind of some of the key influences next year?
Okay. Yeah, I mean, I certainly think, right, we're still going to see defense minerals be where there is some growth, right? All the NATO countries promising to expand their defense budgets. So we're still going to, antimony is still going to be, I think, a place to look. There's obviously the U.S. antimony deal where the U.S. antimony is buying antimony for the U.S. government. But yeah, it's still going to be an increase in demand. So I would say, defense minerals are still something that I would imagine there's just going to be more and more deals coming out for, more thinking about how do we get, gallium, how do we get antimony, how do we get bismuth, things like that. I'm sort of cautiously optimistic about some of the, the nickel, cobalt stocks, because I do think we're seeing a shift towards drones in the defense budget, and they need the NMC batteries, right? We sort of had this time maybe 5 years ago where NMC batteries looked like they were going to be the dominant, battery chemistry. People sort of did, high nickel, low cobalt. Then people moved to LFP. But now I think, there's going to be some demand coming back with just this, all of the innovations in Ukraine around drones is going to make many militaries look and be like, okay, we want something like that. We need more NMC batteries. We need that nickel and cobalt. So I can kind of see a bump up for them or a return for them.
Okay, interesting. And yeah, I mean, it's definitely been quite an interesting year, I would say. And I think there'll be some more kind of interesting trends coming out in 2026. But those were all the questions that I had for you today, Ian. So I really want to thank you for joining me here today on the Assay. And yeah, stay tuned for more of Ian's research coming out soon.
Yeah, we hope to see you in 2026 to talk about whatever it is that the new administration's put out. Yeah.
Absolutely. Well, thank you very much.
Bye-bye.